Next up, we have Arild Skedsmo from WWF-Norway. Arild, the floor is yours.
Thank you, and thank you for the invitation, despite our perhaps a bit different role than many of the other speakers here. Our job is often to sort of take the science and the knowledge that we have and add some good thinking and ethics and translate it into political action. And in that spirit, we will propose we have two proposals for the world's largest pension fund that we just heard about, and to make it more relevant in meeting the challenges of global warming that we all face. And hopefully I will also make it clear that, or at least argue that this also makes good economic sense. The world is heading steadily for 4 to 6 degrees warming. Global leaders worldwide has committed to stay below 2 degrees. The facts are really clear. Science is crystal clear. We know what we need to do. It's basically to shift from fossil energy to renewable energy over the next 30, 40 years in full. Part of that would be to, over the next few years, actually, according to the International Energy Agency, to stop investment in fossil energy infrastructure quite very soon. And also implied in this is that roughly 2/3 of all fossil fuel reserves in the world need to stay in the ground. Despite these facts, quite clear, emissions are growing, largely due to continued investments in fossil fuel energy, coal in particular. Fortunately, we also see good or steady increase in investments in renewable energy, but even with production increases of between 25 to 60% per year for like wind and solar power, it's way beyond what we need to actually reach our targets. And what we need is then an absolute and quick shift from investments in fossil energy infrastructure to renewable infrastructure. And then there comes the sovereign wealth funds, the importance that we just heard about, the growing importance of the sovereign wealth funds globally, and in particular for Norway, which is the largest one. Yeah, previous speaker said a little bit of the facts about it, but you can also add that I mean, it has 60% of its of the fund is in equities, and about 10% of those are in the world's top 200 fossil fuel companies. If you look at the share of that ownership represents and translate it into the amount of carbon in the reserves, it's about 108 times the Norwegian's annual emissions that the pension fund owns in fossil fuel reserves around the world. Neither an index-based equity investment strategy nor government bonds contributes to the shift in investments that we actually need. Not at all, actually. There's no time for that now, but I would argue that it's actually what we see is an investment in business as usual scenario. When you have an index-based investment, you go where the world is going, and you strengthen investment in that. And that's what the fund is doing, which again will give us a 3 to 4 or 4 to 6 warming in a not too distant future. So what we propose instead is for the fund to be, or the new government actually, to give the fund a new mandate to invest in renewable energy infrastructure and production and distribution directly, not equities, but direct investments. And to exclude the funds from investing in the worst end of the fossil fuel business, coal and tar sand. This may seem sort of politically challenging. It is, of course, but it also isn't that big a change, really. The investments in direct investments in infrastructure is something that the fund already does in real estate. The fund can and do invest in real estate in the big shopping streets of the world, and they are a substantial part of some streets. So it would be the same guidance for that. Similar for the withdrawal, exclusion of coal, for instance, it's similar to what we already heard, that the fund actually does for certain sectors like nuclear weapons, anti-personnel mines, and tobacco. So following the example of how it's sold out its shares in tobacco companies and excluded that from their investment universe, it can do the same with coal. Economically, distributing its investments it's quite narrow focus today on stocks and government bonds and a little piece of real estate. It's argued by many finance people as a good way of reducing the investment risk of the fund. And actually, the bank itself has asked for a mandate to invest in infrastructure. So this is something that the bank itself actually thinks makes sense in terms of distributing risk, reducing risk. And it's also a better way of utilizing the specific characteristics of the Norwegian fund. It has almost unlimited investment horizons. It doesn't need to worry too much about what's fluctuating up and down at the stock market from day-to-day basis. And it hardly needs to do any liquidity. It doesn't need to take up a lot or be able to release a lot of funds on a short notice. In terms of, or in relation to coal, I think we have had a quite good debate over the last sort of year or so about the sort of coal carbon bubble. Going back to what I said, about 2/3 of all the fossil fuel resources needs to stay in the ground. The facts around this are basically recognized, but we don't see that this being reflected well on the value of companies. So there's a big risk of a devaluation of the companies that the fund is invested in. And also, if you look at Norway's total exposure to fossil fuel, it's not only the fund, it's also the state's direct ownership in oil and gas fields in the North Sea, and it's majority ownership in Statoil. All in all, this is a very substantial exposure to fossil fuels, and many would argue that we could reduce the risk substantially by at least withdrawing the investments in the pension from coal. All in all, these are two, from our point of view, rather moderate steps that the fund can take. I think it's going to make a huge difference. It will have a direct impact in terms of providing capital for renewables investments, and it will hopefully be seen by other investors and guide the way for more responsible investments when it comes to the climate change challenges we have. So that's what I'm going to say. I'll just add that both these issues are on the part of the political debate now. It's being debated. It's extremely important that as many as possible contribute to that debate and that discussion. And it's not only the sort of environment movements that raises these issues. We have credibility in ethics and environmental impact, but not so much on finance. So even if it's argued facts, you also need others to contribute to that debate. Thank you.